Yo, what's going on, everybody? It's Curtis back with another investment video. If you don't know what to do because you're new, make that like button go blue. Please hit that like button. Please hit that subscribe button. I'm on a mission to get to 250 subscribers. Um, I always convey my goals, as I think it's always good practice generally, and especially when it pertains to investment. It's always good having a goal. So that's the reason why I always tell you my goal of the volume of subscribers I'm trying to get next. But I'm very close to 250 subscribers, and once I hit it, I will unveil my next goal. But if you're not new to the channel and you're watching this, please comment on the videos and leave your feedback. All feedback is appreciated. Leave me information or videos you might want me to cover. I always try and accommodate as quickly as possible. But also, if you're just happy to enjoy the content, then please leave that feedback in the comments as well. It helps me, but also I think it helps other people that are new to the content that might watch the comments or read the comments before they watch the video rather. Understand and appreciate that the video is helping others. So definitely leave a comment if you are into the content. Now, I'm a firm believer in educating through demonstration. So, what I try not to do is give you too much theory, but try and balance the theory with practice so you guys see what I personally do. And obviously it is personal, so this is not necessarily a recommendation or a hard and fast rule on this is the way you should approach anything. Like I've mentioned in previous videos, always do your, not Christian, but one with the why, always do your own research. And you will naturally develop your own style in terms of investing and style in selecting stocks, etc., etc. But just see my videos or just see the way I approach things as potentially a mechanism to help, guide you in terms of the way you can, or one potential approach in the way you can sort of make choices. Today, I wanted to do a video on ETFs. First of all, I wanted to apologize because, to be honest, I should have done this video a lot sooner, as I think ETFs is a particularly useful tool for new investors. But hey ho, I'm doing the video now, and ETFs basically stand for easy to forget. Now I know what you're thinking, Curtis, it doesn't stand for easy to forget, they stand for exchange traded funds, and you're right, it does stand for exchange traded funds, but to me it stands for easy to forget. And I will explain to you later in this video why I believe so. But yeah, let's go with the technical term if you want to be technical: exchange traded funds. And effectively, a fund is basically a basket of stocks. Exchange traded means it's traded like stocks. So it's basically a group of stocks, a basket of stocks that's traded on the stock market, just like an individual stock such as Apple, etc. So the next question is, what's in the basket? And the beauty of ETFs is that it can be absolutely anything. So you might have ETFs that track an index, or you might have ETFs that track a specific industry like technology, or it might even be more bespoke than that. It might be AI and robotics specifically. You might have ETFs that track a specific region. So it could be ETFs that track, Vietnam energy usage, or technology companies in Japan. Or you might have ETFs that track a specific commodity. So it could be about oil, or it could be about gas or corn or rice or wheat or cocoa, etc. You might have ETFs that track bonds, and they could be corporate bonds, or it could be government bonds, and things like gilts, etc. So the beauty of an ETF is that an ETF can be created by a financial institution, many financial institutions, and once they're registered, it can be traded just like any other specific stock. Now, some of the benefits of an ETF is that you get, well, I think the first benefit is diversification. ETFs can expose you to a whole bunch of new stocks, and effectively diversify your portfolio. Diversification is key, that you don't put all your eggs in one basket, and that's why it's really handy to have this basket that has multiple different eggs in potentially, to give you a more balanced view of the stock market. It can help you gain exposure to a specific sector. So, if you are someone that maybe knows, I don't know, technology really, really well, and you're comfortable selecting your own technology stocks, but you don't really know the energy sector that well. You might invest in an ETF that tracks a whole bunch of energy companies rather than trying to select your own energy stocks. So it's a good attribute to have in your repertoire, in your portfolio, to get into other sectors. You might want to, another benefit of ETFs is to grow in line with the market. So you're going to have some investors, they're not trying to beat the market or to have any sort of monumental gains each year, but as they know, over a long period of time the market always rises, and so they might just feel that I'm just going to invest in an ETF so that I rise in line with the market. And an ETF's role is to track the market as closely as possible. So you might have ETFs that track the S&P 500 or the FTSE 100, which are obviously well-known indices. And so if the ETF is tracking it closely, then as the FTSE rises, your ETF and your returns rise. And another benefit of ETFs is that some of them have very regular returns when it comes to dividends. So you'll have ones that will be biannually, so twice a year. You'll have ones that will be quarterly dividends, so 4 times a year. But you'll also have ETFs that will pay you on a monthly basis as well. So it'll be nice to always every month be receiving a dividend check. So that's another benefit of ETFs. I'm going to do a video to come very soon on investment styles, and I think understanding your style as an investor is a really important prerequisite to making good investment decisions. And it just goes to show that my investment decisions might be suitable for me because I have a specific style. You might have a completely different style. That means you don't want to do X, Y, and Z activities. So a different type of stock or a different type of approach is good for you. So I'm going to do a video on investment styles. But in terms of one of those styles, which is passive investing, ETFs are great for passive investing, which is basically investing not actively, putting your money somewhere and just forgetting about it. And that's the reason why I call them easy to forget. And that's ironically, that's the way to remember them, etc. So onto this video. This video is about I'm exploring a few ETFs. I really wanted to add some ETFs to my portfolio for the reasons I outlined previously. So for the last sort of 6 months, I've obviously been actively selecting my stocks. I've shown you how I've done that using Simply Wall Street. I've shown you what the criteria I'm sort of looking for in terms of growth stocks, but with a bit of income as well. And I've obviously had to monitor that. I've shown you stocks that I've sold, new US stocks that I've bought, etc., etc. But what I wanted is to get some stocks that allow me to, hit 3 specific goals. And that's the reason why I always mention goals. Goals for me is extremely important when it comes to investing. So the objectives I've got, which is the reason why I want to use an ETF, is to, 1, leverage growth in future industries. I know that there's going to be industries and sectors that grow in the future, and I won't have the in-depth knowledge on those organizations, nor will I have the appetite to do a whole bunch of research on sort of 100 organizations or new companies in that sector. I also might not even have the ability to even invest in those companies, because as individual stocks they may not even be on the stock market yet, or they may be on some exchanges that isn't open to the platform that I use. So as a way to access them, an ETF is a potential way to sort of leverage that future growth. I'm also looking for regular income. So as you guys know, I use the Freetrade ISA, which is going to be £3 a month, but I've just found out today that they're not going to start charging until July. Hooray, which is good. But also to get a dividend income that covers that cost, so then effectively it still maintains being free for me. And I also want a part of my money just to grow in line with the market. So a part of my money where I'm not worrying about actively investing, I'm not worrying about trading in and out, but it just naturally grows in line with the market over a long period of time. So I will add this to the previous Google sheet that I gave you before with the stocks on Freetrade. I'll put another tab in there and I'll add this in there, so you don't have to try and remember this or write all of this down. But these are all of the ETFs and also investment management funds that are on Freetrade at the moment. So what I mean by that is, for example, funds like Man Group, which there are organizations that invest in a range of funds, so they're not specifically an ETF themselves. And what I really wanted to do is just to sort of get an overview on, specific key elements. So, what their current price is, what their expense ratio. So with ETFs, there is something called an expense ratio. And unlike stocks, this could be for some people considered a downfall, but for others, it can be considered a positive thing, is they charge you a fee. And that's called the expense ratio. So that fee is based off the balance that you hold within the ETF. Now, you have to really watch out for ones with high fees. All fees potentially look low, but then if you're continuously adding money, then it can obviously build up over the long time, especially if you have multiple ETFs. The reason why I think it's not such a bad thing is because effectively you're paying for professionals to really do all of the legwork and the hard work for you. And with some of them, I will give you a sort of calculation of the fees. It can be inconsequential from my personal standpoint, whereas some are a little bit higher. I'm going to talk to you about the dividend frequency. So when they pay dividends, what their current dividend amount per share, sorry, and then what that dividend yield therefore looks like. And then their historic performance, so their return over the last year and their return over the last 3 years as well. So I basically plotted this. I've got this information from a site called justetf.com, which I'm going to show you. Again, all links will be in the description. And I wanted to basically evaluate all ETFs by this criteria first, but then also look at composition. Now, composition is exploring what that ETF specifically holds. So going back to what I mentioned earlier, what is it that exchange traded fund, so fund basket of stocks that are traded on the stock market, what is it that basket is currently containing, which was going to be aligned with my specific goals. So I'm not going to go through all of these, but I've effectively whittled down to a few that interest me, which I'm going to talk to you about today. So there were 6 ETFs that sort of caught my attention that specifically met the objectives I outlined earlier. The first being the NASDAQ 100, so EQQQ. And now this is an ETF that basically tracks the NASDAQ. You would have heard of the NASDAQ. It's something quite popular that's mentioned on all sort of investment news channels, etc. But it's basically a composite of a whole bunch of companies in America, mainly tech companies, but there's also other companies that are not necessarily traditional technology. It could be renewable energy, etc. And so I wanted an ETF that potentially tracked, the market in a specific way. So as you can see with the NASDAQ, the price per share is $142 per share, or pounds per share. It's quarterly in terms of dividends. I'll get 0.85p per share that I hold. It's about 0.60 in terms of a dividend percentage. But from a growth standpoint, their last year return was 26%. The return over 3 years was 89%. So quite a significant return there. Then I was looking at TRIG, which is a renewable infrastructure group. And what they look at is all renewable infrastructure across the world. So that is sort of wind power, solar power, both on and offshore, solar panels, basically all renewable energy sources. Now, the reason why there's a lot of NAs here is because the tool that I'm using to sort of get the information, this information wasn't listed in that tool, and there is a kind of a reason why, which I won't bore you with. So sometimes you have to kind of do a bit more digging and find what's called a KFI, key facts illustration, or a key facts document. Every ETF has a key facts document. It's a document that's a 1-pager or 2 pages that's prepared by the fund manager, and it tells you the risk profile, how risky is this ETF, it tells you what it tracks, it tells you its goals, its purpose, what dividends, how much the dividends are going to pay to you. It gives you all of the information I'm outlining here and a whole bunch more. It even gives you contact information if you want to reach out to someone and find out more information. It's a great tool to look at before you start parting with your money. The next one I was looking at is Rob G, which is provided by Legal and General, and it's called Robo Global. And effectively, it's an ETF that's tracking the AI and robotics industry. So I'm a very I believe obviously in the technology industry. I have a decent understanding of things like technology, AI, etc. Not not in depth understanding, but let's say a strong appreciation is probably the best way to put it. But there are loads of new companies, doing really innovative things in that space. And so what this fund tends to do, or is aiming to do, is to sort of invest in those companies, track the performance of those companies, and obviously make a growth profit. They don't pay a dividend, so this one's purely on growth. But the last year return was 21%. And the last 3 years return was 81%. Now, I must say that past performance isn't always an indicator for future performance. But I look at a whole bunch of factors, and because AI and robotics is still in the early adoption phase, I still think there's a lot of growth in that sector, which is the reason why I'm looking at it. The next one is IUSA, which is iShares provided by BlackRock, and it's effectively an ETF that tracks the S&P 500. I think the S&P 500 is a very, very strong gauge of the US economy, a very strong gauge of the sort of top 500 companies. Things like Apple, Netflix, etc. Are part of the S&P 500. The expense ratio is exceptionally small, so 0.07. So to give you a flavour, if I invested £1,000, that's 7p would be the charge per year. So it's very, very small from that standpoint. They pay quarterly dividends, which is good. Dividend yield of 1.59%. And yeah, the last year return was 20.59 and the 3-year return was 61.46, which is decent. And then the last two, VUCP and STHS, were corporate bonds. So bonds are effectively when you lend money to either a company or to the government. A good example is, for example, Debenhams. So Debenhams right now is going into administration, or it's having a lot of troubles. I need to check what the latest status is. But if they do go into full administration and become liquidated, they'll use their assets to pay bondholders first. Shareholders will effectively lose. So when you buy shares in a company, you own the company, you're a shareholder. When you buy a bond, you aren't a shareholder, you don't effectively own any shares in the company, but you've actually lent the money, you're a creditor to the company. So rather than the bank giving you a 5k loan, you've given the bank or the company or a government a 5k loan. And because of that, the slight nuance there means that they owe you the money effectively. It doesn't mean you'll get all of your money, but what it will mean is that the value of the assets, should they ever go bankrupt, they will try to pay you out first before they try to pay shareholders. And in most instances, shareholders won't really get paid, to be fair. So I'm tracking a few bonds. Bonds is suitable for people that are defensive investors. So when the market is bad, bonds usually rise. When the market is good, bonds tend to either stay stable or fall. Right now, we're in a good market. We're in a bull market. We're seeing all-time highs. So bonds will tend to stay stable and fall. But there have been talks of things like a recession coming in potentially the next 1 to 3 years. Now, if that situation occurs, the bond market will tend to rise. The stock market will tend to fall, etc. But the reason why I'm also looking to invest in bonds is, one, not to be overexposed into aggressive growth stocks, but also to get a monthly income. So as I mentioned, the Freetrade platform will start charging me £3 for my ISA on a monthly basis. They've frozen it for another 3 months, which is good. But I'm used to not paying for that ISA. So I could potentially invest in a bond and get a monthly dividend return. And that monthly dividend return could effectively cover that payment for me effectively. And also, yeah, that is kind of, one of the key benefits. And you can see there are generally some, high favorable interest rates with bonds. So of all of the stocks that I looked at, that Freetrade currently hold, now there are loads of bonds. These are the ones that kind of tickled my fancy. So, I'll be looking into these a lot more, looking into the companies that make up all of these specific funds. And at some point next week, I'm going to decide on which one or ones to invest in. the tool I use to kind of do the evaluation is this tool here. So someone sent me the link to this tool called Just ETF. So Just ETF is pretty cool in the sense that if I type in, say, IUSA, this gives me, that specific bond, and I can select that bond, that specific ETF, and then I can find out information from its fund size, which then lets you know, how liquid the fund is, so how easy you can get in and out of that fund in terms of buying and selling, the current price, the expense ratio, which is the cost, its performance, over 1 year, over the last 3 years, as I mentioned, etc. When I talk to you about the key facts illustration documents, you get all of these documents here, and that tells you, for example, its risk reward profile. It tells you the expense ratio, it tells you its performance, etc. As I mentioned, there's a whole bunch of contacts, as I mentioned here as well. It's got prospectus, so fact sheet, annual reports. It's got all of the information you might need in order to look into that bond. But then you get things like, what's its returns. So if I select on that, it's just currently loading. Let me be patient. Here we go. Tells you obviously, its returns, etc. on a monthly basis. So a nice visualization from that standpoint. It tells you the dividends that it specifically received. Now, you have to sign up in order to get the dividend yield percentage. Fortunately, I just do a formula in Excel and I can kind of work it out. So I'll leave that formula in the description. Or actually, I'll leave the link to the actual spreadsheet in the description, so you guys can kind of benefit from that without having to do anything. But it shows you every quarter these are the dividends that it's currently paying out. So I'll leave in the link in the description. Have a play around with it. Have a look at different ETFs. If you click on this button and you go to ETF Screener, it tells you the different classes from equity, so companies, bonds, as I mentioned, precious metals, commodities, real estate, money market, etc. And then you can kind of filter by different factors such as 1 year, 3 year, 5 years, fund size, etc. Now, as you can see, there's 1,126 ETFs that is currently listed on this platform. There are probably about 30 on Freetrade, so I kind of wanted to take the opposite approach because I know that I'm not going to invest via another platform at this current stage. To keep things simple, I just wanted to list the ones Freetrade had and only explore those ones. But it's well worth exploring what other bonds and securities are out there, because you might find that an ETF that you're really interested in, and Freetrade have a section which allow you to request stocks, and then you could request a specific ETF and hopefully they'll bring it on the platform. So I, for instance, I'm going to start looking for more socially responsible ones. So if I type in SRI, this is socially responsible investing, and then it tells me a whole bunch of different ETFs that are in the socially responsible space. So I've got a video on ethical investing which will make socially responsible a lot more clearer to you, but I think it's going to be an emerging concept. It's not a fad. I think it's something that people are going to be really thinking about in the future. So I might find one that I like here, and then I'll go to Freetrade and request it, and hopefully in not too long they can kind of bring that onto the platform. But I'll leave all of the links in the description. So with my mantra of demonstrating through educating through demonstrating, I wanted to show you which ones I'm currently looking at. And then at some point next week I'll do a follow-up video which basically just covers the ones I invested in, how much I'm going to put towards it, what my investment strategy in terms of will I add money consistently, or will I add money periodically, etc., or will I just do a lump sum and sort of leave it and forget about it for the next year or so. So I'm going to put that information out there. But I hope that information was useful. ETFs, easy to forget, and it's good that you remember that, because if you're the type of person that wants to just buy some investments and let them grow without you having to really worry about it, then ETFs are an incredible asset to have in your repertoire. So definitely start looking into that. But get in the comments, please like, please comment, please subscribe. If you've got any other questions on ETFs, I'm sure you'll have loads. There'll probably be a whole bunch of stuff I haven't covered. Please get in the comments, and I'll do my best to answer all of your questions in a timely, but more importantly, accurately fashion. But yeah, I'll speak to you guys soon with a follow-up video. There'll be a video this week coming up on, the different styles of investments. And I'll also do probably another portfolio update either towards the end of this week or maybe at some early stage next week. So yeah, lots of videos to come. Please help me get to 250 subscribers, and then I'll release my next goal. Other than that, take care, have a great week, and more importantly, happy investing.